Right. So guys, we have looked into this question, right? What do I mean by looked into this question is we have read this question thoroughly, and you were asked to answer this question. So I'm not gonna waste time trying to going through this question again. I'm simply going to pick up the points and I'm gonna start answering this question. Sounds like a plan, everyone? Yes or no? Everybody sounds like a plan? Everybody sounds like a plan? Okay, students who have missed my previous batch, previous class, that is which happened on Saturday, I would recommend you to go back, watch the recording, and then continue with this recording because it is continued. Okay, right, brilliant. So going back, if you look here, we were talking about Minty, and our first point was this, right? Our first point was this 5 million on updating, repairing, and replacing a significant amount of machinery used in the production process. Okay, right. Brilliant. So I'm going to start writing in the exam. I'm going to structure my answers, and what I'm going to do is I'm going to go back, work with my audit risk, but with audit risk, I know what I'm supposed to do. I'm supposed to take an MTR approach, materiality, treatment, risk, and response. So I'm going to base it on that, like we've looked at in the previous class. Okay. So they say Minty has incurred 5 million on updating, repairing, and replacing a significant amount of machinery used in the production process. That is the problem. We know why it is a problem. I'm coming back. I'm going to answer. Okay. Right. Minty, in the exam, I'll say Minty M. From that point onwards, I can use M. My examiner will not penalize me for that. I can say M and I can go on from that point onwards. Clear? Okay. Minty has incurred 5 million on updating, repairing, and updating property, plant, and equipment. Now let me wrap this out. Where's my wrapping? Wrap. There you go. Minty has incurred 5 million on updating, repairing, and updating property, plant, and equipment. You know, this represents approximately, we spoke about 5.8% materiality. There you go, it's written already, 5.8% materiality. So I'm going to talk about that. Okay, this represents 5.8%, 5.8% on revenue. Therefore, this is material. Now that's my first thing. Okay, materiality, treatment, risk. Always keep in mind materiality, treatment, risk. So this is material. We have established it to the examiner. This is material. Okay, right. The risk. What is the risk? The risk here is that revenue expenditure can be classified as capex, capital expenditure. What would this result in? Resulting in overstating profits and property, plant, and equipment. Now guys, just look at that point. Just look at that point. Try to refresh. Okay, just look at that point. I'm speaking about materiality. Did I touch materiality? If the figures are there, I talk about materiality. Here, there you go. I spoke about materiality. I have to speak about treatment. Did I speak about treatment? Yes, there you go. What is the treatment? They have incurred 5 million on updating, repairing, and updating. It's not updating. I believe it is updating, repairing, and replacing. So updating, repairing, and replacing. There you go. And replacing property, plant, and equipment. This represents 5.8% of revenue. This is material. The risk here is that revenue expenditure can be classified. I'm talking about the risk as well. Now, I'm not done there. I have to go back, tell the examiner why this is a risk. Now, I have to tell the examiner, okay, look, I am the auditor. I'm reviewing the financial statements. I see There has been expenses in terms of property, plant and equipment. This could be revenue, but probably the company has taken it as capital expenditure. Now I'm going to give a response, but response from an auditor's point of view, because auditor is going to give the response. Are we clear? Are we clear? Okay. Now what could be a response? Now you are reviewing this 5 million expenditure. You have the expenses. Okay, expenses on updating, repairing, refurbishment, etc. Everything you have. Now you when you look at the invoices, you know this is capital expenditure, this is revenue expenditure. You. The company will also have the capital expenditure policy also. So based on that, you assume, okay, you look at it, okay, you know this is capital expenditure, this is revenue expenditure. So you'll take the breakdown. Based on that, you will do a check if this is correctly classified or not. Are we clear? Because you are the auditor, I will review the details of cost in relation to 5 million. Number one, okay. To confirm, what are you trying to confirm? You are trying to confirm the classification, right? To confirm the classification between revenue and capital expenditure, to ensure the split is fairly made. Are we clear? Are we clear? Keep it very simple. Give one response, your examiner will be happy. Don't try to fill your answer sheet with too many responses. This gives you only 2 marks in the exam. One risk, one response. Now, where will it be challenging? The response will be challenging. So, for your response, you have to practice, guys. You have to keep on practicing. Are we late? No, we are not late. We have about 1 month for the exams, close to a month for the exams. If you start now also, you will be fine. And with me and Farin going to be with you for the next 1 month, we can take this through. Are we clear? Are we clear, guys? Everyone, am I clear? I want everyone to respond, please. Are we clear? Were you able to write something like this, guys? Be honest to yourself. Were you able to write something like this? Were you able to come close to this? Now you need to do an audit by yourself. You need to audit, okay, fine, this is what Ziyan has written, this is what I have written. You compare. Okay, not enough. You have to start working on it. That's how we have to learn. Okay. Number 2, we know 15 warehouse story. So let's go back. Let's answer. Let me wrap everything so that it's easy and doesn't disturb us at all. There you go. Okay. Minty has 15 warehouses, which also include rented ones. Are we clear? This is linked as rented ones. Okay. What is the problem here? There is a risk that rented warehouses can be included as PPE in the financial statements. There you go. That's the risk. Now here you do not have a figure. You don't have to calculate materiality. You don't have a figure. You don't have to calculate materiality. You can be direct, tell the exam. Now let's think about it. Now you take PPIM building. We have moved to a new building. Okay. Now this particular new building that we have, I come and tell you, hey, look, Tirza, look here. Are you with me, Tirza? There you go, Tirza, I come and tell you, hey, look, this building is mine. This building is mine. Will you believe me? Tirza, will you believe me? Will you believe me? You'll believe. I have to see the rights and obligations. Okay, how will you see the rights? How will you see the rights? How will you know that this is mine? Tirza, how will you know that this is mine? What do you need? Well, non-current asset register is fine. That is maintained by me, no. Non-current asset register is fine. But let's go one step ahead. Property. Forget about being an auditor. Just let's say we are human beings. You and I are human beings. I come and tell you, this is mine. Forget about me. Forget about PPIM operating here. If I come and tell you, okay, this is mine, will you believe me like that? There you go, Abdullah. You will look for ownership documents. Ownership of documents means what? Ownership documents means what? When you're talking about ownership documents, what comes to your mind? How do you confirm ownership normally? Deed, title deed. There you go. So what you would do is, I will inspect the title deed to confirm the warehouses owned by Minty, and will ensure that only owned warehouses are included as property, plant and equipment. There you go. Now in the exam, I understand this warehouses is like, warehouses. There's different pronunciation. I did not get my spelling right. Under exam pressure, don't worry, you get your marks. Don't worry about that too much. Unless otherwise, the sentence itself is changing. Your examiner knows here it's warehouses. So don't worry, you can go on responding to the question. But here, right now, that's fine. I'm going to make the change. Okay? Yeah. Are we clear? Everyone understood? Yes or no? Second point covered. Let me go further. Number 3. Okay. Now, what are they saying? Number 3 is where you have introduced a new general ledger with the old and new system being run in parallel. Okay, we are going to talk about that. Okay, right. M introduced a new accounting general ledger system. This was operated with the old system for 2 months. What is the risk? What is the risk? The opening balances wouldn't have been properly taken from the closing balances. There could be a mistake there if you have not extracted it accurately. Correct. So there's a risk that opening balances could be misstated if the extraction of closing balances were not done well, leading to material misstatement in the financial statement. So this leads to a material misstatement in the financial statements. There you go. Third point. Already we wrote the third point. Okay, now we have to give a response. How do we give a response? Now you are the auditor. You know the problem could be with the opening balances. So what are you going to do? You are going to review the opening balances with the closing balances. So old system closing balances, you will see the new system opening balances, you will compare. Okay, if there have been extraction, if the extraction has been taken place correctly or not. Are we clear? Are we clear? I will undertake a detailed review of the closing balances in the old system and compare with the new system opening balances to confirm if the figures are accurate. Guys, was that difficult? Straightforward, isn't it? Guys, it's straightforward, isn't it? Yes or no? Guys, it was straightforward, isn't it? Hello? Okay, let's go further. Now, next point, we know it's going to be based on the new credit controller. We've already looked into this last class. So we are going to write our point. Okay. MS incurred 4.5 million was development cost, isn't it? Okay, here it's 1.5 million allowance. Okay. This is the credit controller. M believes the new credit controller will be able to recover all pending receivables. Therefore, the allowance was entirely written back. Correct. The allowance amounts to 1.5 million, which is how many percent? 1.8%, which is 1.8% of revenue. As such, this is material. Okay. It appears the trade receivables could be overstated as simply by recruiting a new credit controller. M cannot recover all its trade receivables. There you go. Are we clear? Are we clear? Understood so far? Yes or no? Now, what are you trying to say here? Now, what happens is in the audit exams, the most challenging area for students is to give the response, because response is something that you need to think and give. The risk, you can just take it from the scenario. Now, students find it a bit difficult to identify a response, right? Now, you need to be very, very careful to pick your audit risk properly, understand why this is a risk. Now, here, the issue is, listen to me very carefully. You are writing off 1.5 million, correct? 1.5 million has been written off. Now, if you are going to write off 1.5 million, guys, the most important thing that you need to keep in mind is, well, this guy is writing off. What is the assurance that he has over this, over writing it off? Why does he believe that he will never recover it? He believes he will never recover it because of the credit control. Correct. Now you want to check if his belief is correct or incorrect. Now that is your objective. How will you check if his belief is correct or incorrect? Hold on, listen to me very carefully. What you are going to do is, my dear, you can do two things. Number one, you can do a post-year-end cash receipt testing. Listen to this technical term. Post-year-end cash receipt testing. A post-year-end cash receipt testing means, guys, after the year-end, your year-end is 31st December. After the year-end, you are going to go and check the financial statements if the money is coming. A post-year-end cash receipt testing. If the money is recovered or not. A post-year-end cash receipt testing. Number one. Or number two, you can write a letter to your customers. Whose customers? Minty's customers, asking, hey, are you going to pay back to Minty? Because the new credit control is coming. Are you going to pay back to Minty? So now you have assurance the customer is going to pay or not. So there are two things that you can do. But in the exam, just keep it simple. Write one. That is enough. Okay. Now you can say, I will conduct a post-year and cash receipt testing to understand the level the level of trade receivables recovery after the new credit controller took over. This will help me understand the reasonability of the finance director writing off the allowance. Okay, can we write a response like checking past credit sales and settlement trend to check if the customers are settling? Are you talking about individual customers trend? You're going to check, okay, this guy A, we've been doing business for 5 years, for 4.5 years, he never made a problem. But now, okay, he's having some sort of an issue, something like that. Yeah, if you can specifically quote it. But the best would be, I'm going to do a post-year and cash receipt testing. Now you remove the receivables, right? Now you say, no, you are removing the allowance, right? Now you say, look, it's going to be trade receivables. But my thing is, you're saying you're going to receive. That's why you're removing it, no? So from allowance, now what I'm going to say is, I'm going to check after the year end, okay, did they actually pay? Or I write a letter. I write a letter asking them, okay, are you going to pay? We call it a receivable circularization. Are we clear? Understood? Discuss with the finance director as to the reason why he or she thinks not necessary to maintain allowance. Well, the reason why you are going to discuss this is because the finance director says the credit control is already there. That's the reason why I believe the allowance is not necessary. Now, I recruited the credit control. Why did I recruit? Because I believe all my allowance, my receivables will be received. Now, if you are going back to the finance director, your finance director can always say, hey, look, I've got a credit controller with me. That is the reason why I am removing my allowance. So when you say discuss with the finance director, the reason why he thinks not necessary to maintain an allowance, probably he can always go back and say because of the credit control, because the credit control is already there. You understand? What is receivable circularization? Is it asking the opinion from the customer that they will pay or not? Yes. Now, our client is Minty. Minty is supposed to receive money. We are going to send a letter through Minty with the confirmation of Minty to our customers asking will they pay the company or not. So for example, you have to pay PPIM. For example, okay, probably you don't have to pay. For example, you have to pay PPIM. I'm the auditor of PPIM. Through PPIM, I ask, okay, will you be paying? To whom? From you. Directly, I'm coming to the customer. Are you clear, Saifullah? Super. Now let's go further. Next point. Is 4.5 million developing a new brand of fizzy drinks. Correct. That one, right? Okay. Minty has incurred 4.5 million to develop a new fizzy drinks. This represents how many percent? 5.3%. This represents 5.3% of revenue. As such, this is material. There you go. Now, materiality is done. Now, what is the risk? Risk is that the criteria for capitalizing development cost is not yet met, but they have capitalized this as an intangible asset. Are we clear? So there is a risk. There is a risk that the conditions are not satisfied. Are not satisfied. However, this is treated as an intangible asset leading to overstating intangible asset and profits. Are we clear? Are we clear? Understood? Everyone, are we clear? Everybody with me? Okay. Now the problem here is the conditions probably are not satisfied, but this has been capitalized against IAS 38 intangible asset. Now first I want to know the breakdown of this expenditure. I want to confirm if the conditions are satisfied or not, if they meet the conditions or not. And probably I'll have a discussion with the finance director. Okay. As to why he thinks this has to be capitalized. Okay. So I will review the breakdown of this cost. To understand if this meets the conditions of capitalizing. Number one. Further, I will discuss this with the finance director on the rationale behind capitalizing this cost. Are we clear? Guys, just ignore my typos. It's okay. It's okay. Don't worry about typos. It's fine. Number 5. Done. Now in the exam, I'm supposed to give 6. Okay. Now 6. 12 marks means 6. 6 risk, 6 response. Okay. So I'm going to go ahead and write my next risk as well. Okay. Number 6 could be mixing of raw materials. Okay. Right. Due to a problem with the mixing of raw materials, there were cola bottles which were written. Am I clear? Yes or no? Somebody spoke to me about this. They said there could be a problem with revenue. Why? If the sales returns are not accounted properly. There could be a misstatement in revenue if the sales returns were not accounted accurately, leading to overstating revenue and revenue and trade receivables. Are we clear? Guys, are we clear? Are we clear? Everyone? Here I'm only speaking about revenue. I'm not speaking about inventory yet, so don't worry. I'm only speaking about revenue. My revenue could be overstated. Why? Because my returns are not adjusted properly. Are we clear? Are we clear? Okay. How would I retaliate this? How would I respond to this? Obviously, I'll take the inventory list of inventory return. and I'll go and check back with revenue if this has been adjusted and trade receivables is adjusted. I will take the detailed list of sales returns and I will confirm if revenue and trade receivables have been adjusted to reflect the adjustments, to reflect these adjustments. Are we clear? Understood? Understood? Yes or no? Super. Well, I know I have to write only 6 in the exam. I know I have to type only 6. But there are 8 here. For the purpose of studying, can I respond to all 8? Guys, is it okay? Is it okay if I respond to all 8 for the purpose of studying? In the exam, I have to respond only for 6 because 6 risks, 6 response. But you know, I have picked 8 in my last class. So I'm gonna finish off the entire question with my 8 points. But in the exam, you don't have to do it. Okay? Anybody in the mindset, you know, when doing audit risk or when doing audit questions, you're in the mindset, okay, fine. Examiners ask for 6, but obviously there are 8, 2 or 3 extra. So what I'm going to do is I'm going to write 8 or 9, but the examiner wants only 6. So what I'm going to do is I'm going to write 8 or 9 so that examiner will go through all 8 or 9 and give me marks for the ones that I got correct. For the ones that I got wrong, my examiner will simply ignore. Anybody with that mindset? Anybody with the mindset like that? You know, examiner is going to give me marks by, you know, going through all my points, and for the 6 correct ones, he gives me my full marks. The remaining 2 or 3 in between also I write, but examiner ignores it. Anybody like that with that mindset? Just wash that off your head. If you write 8 points when your examiner wants 6, your examiner will only read 6 points. The 7th and 8th point cut off. They will not read. You've just wasted time. If you ever have that assumption in you, please remove it. You're not going to get marks. Are we clear? Are we clear? Okay. Now I'm going to go back to my 7th point. My 7th point is inventory valuation. Okay. M has not adjusted the inventory for its damages. For its damages at 1 million. Okay, now 1 million represents how many percent? Where's my wrapping tool? Okay, there you go. 1 million represents, where's that? 1.5 million represents 1.8%, means 1 million approximately about 1.3%. Please take your calculators. Okay, this is just my thinking assumption. Okay, 1 million represents 1.3, 1.4% of revenue. Therefore, this is material to the financial statements. Inventory has to be valued at cost or NRV, whichever is lower. Carrying the inventory at cost even after them being after they being damaged overstates profits and inventory. Are we clear? Are we clear? Response. I will discuss with the finance director on the rationale for carrying inventory at 1 million even when the NRV is lower. And guys, you can go and check after the year end if this inventory has been sold, at what price were they sold. I will also review post year end sales report of the damaged inventory to assess its NRV, and request will request the finance director to writing of it. Are we clear? Understood? Okay, let's go back. Next point. As in previous years, the management of Mint is due to be paid a significant annual bonus based on the value of year-end total assets. So based on the value of the year-end total assets, there is a significant value of bonus to be paid. Okay. Now let's talk about that also. The management of M is to be paid a significant bonus based on year-end total year-end. So I'll come to that. Year-end total assets. There is a risk that the management could deliberately overstate the assets for higher bonus. Okay, so here you have a problem. What is the problem? The management is trying to overstate the assets value. Why? Because the assets value is related to their bonus. Now, how do you solve this? You as an auditor, you have a bigger responsibility to maintain something called professional skepticism. Professional skepticism in simple terms means what? Skepticism means inquiring mind. You got to always have this inquiring mind. Okay, recently, I was in Coimbatore. I do for lectures in India, in other countries, particularly Maldives, Vietnam, in Dubai. So I was in Coimbatore. Okay, I'm sure my students coming through YouTube, we have a YouTube channel, so through them, they obviously know me. I was in Coimbatore, right? So Coimbatore, this is the first time we launched an academy in Coimbatore. This is the first time we launched, and I went on the 13th of October. I flew down from Dubai or London, and then I came down to Sri Lanka, and then I went to Coimbatore. Okay, this is the first time I'm going. My wife comes to me and says, well, you've been to Bangalore, I know. You've been to Chennai, I know. You've been to Cochin, I know. But why are you going to Coimbatore? Are you serious that you have a branch there? I was like, look, I don't have a branch. Technically, there is an institution there, which I work with. They have a branch. He was like, okay, fine, you go. So I went to Coimbatore. I was in Coimbatore. Okay. India, it takes 1 hour from Colombo to India for me to go to India. So I was in India. I went to the apartment. I've been given a nice apartment. I was sleeping. My wife video calls me. Simply video calls me. Like, I cut her off. I called her directly. I was tired. Like, hi, you okay? Then she says, yeah, but I want to see you. I was like, you dropped me in the airport about, 3 or 4 hours back. What do you mean you want to see me? Like, no, I want to see you. I miss you. I mean, I thought, okay, it's normal for your wife to miss you. That's normal. Okay, fine. Video call on. We're in the apartment, right? I'm in the apartment, 2 BHK apartment. Right? My wife comes on a video call. I'm there. I'm on the bed. It's like, ah, nice, okay, you're fine. Can you show me the bed? I show her the bed. Okay, done. Then she says, okay, fine. Can you show me your room? Uh, I switched on my camera, behind camera. So I showed, okay, fine. Can you show me the apartment? I showed the apartment. They're like, I see a nice cupboard. Can you show me that also? Like, cupboard, it's empty. I have my luggage, it's there. No, no, I want to see it. Like, darling, look, it's outside my suitcase. No, I want to see it. Then I opened the cupboard and she knew it was empty. Only then she said, okay, good night, you can go to sleep. See, that is not professional skepticism, that is personal skepticism. So she wants to see what I'm up to. She doesn't just believe me that. Like that, auditors have a duty of professional skepticism. Professional skepticism means inquiring mind. Continuously inquire what is happening. You need to, for example, you're auditing maybe John Keels, right? The director says, the finance director says, okay, the bank balance is 30 million. You don't buy that. No, 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 no. I want the bank statement. Bring it. I want to see it. So professional skepticism is about inquiring mind. Now, when conducting audit, you need to make sure that you maintain professional skepticism, like in this case as well. Okay, I will maintain professional skepticism. SCKEPTICISM. No, SC skepticism. SCEPTICISM, professional skepticism, throughout the audit, and inform all the staffs of the audit members to be careful in of terms of estimations, and make audit uh, make make assets a priority area of concern, meaning everything in terms of assets. I'm going to be very, very, very careful. I inform my team, because the audit risk in relation to that is very high. Are we clear, guys? Am I clear? Yes or no? Am I clear with this? Yes or no? I have a question. I'm coming to that. What will be the post year end period? The period between year end and the financial statements are issued to the shareholders. So there is the subsequent period, there is subsequent review. So that is under your review and reporting area. So we'll come there. Are we clear? Terza says yes. Abdullah, do you understand? Inshifa, Priyanka, Saifullah, are we okay? Okay, I'm going to give you about 3 to 5 minutes for you to go through the response one by one. I want you to go through. It depends from companies to companies, Saifullah. I'm going to give you about 3 to 5 minutes for you to go through the response on your own. Right? I want you to go through the response on your own. Quick. And once you go through, give me a done. Yeah? Done, guys? Are you guys done? Are you guys done? Understood? Abdullah and Shifa, Priyanka, Saifullah, Terza, you done? Okay, I don't want you to copy this, okay? I will share these answers with you. I'll share these answers with you in the group so that you can have a look at them whenever you want, okay? Super. Now, how to get through your audit and assurance paper easily? Not easy, but at least give some effort, put some effort and get through. One thing that I want you to know is always go back to ACCA Global, right? Now, when you come to ACCA Global, you'd see that you have this section, right, guys? Past exam papers. Here, you have your AA paper, and then you have your technical articles and topic explainer. So you take your topic explainer. I want you to make sure that you go through all these technical articles before the exam. Very, very important. Now we've done audit risk. I'm going to share this with you on the group. I want you to go through this. Now guys, if you properly go through this, your examiner gives you entirely in terms of audit risk what is required for you, the model to everything. But if you look at it, ultimately your examiner says this is an article written by your F8 examining team, meaning a member from the examining team is writing audit risk technical article for you. Why? The reason being very simple. If you take your Kaplan, your BPP, my notes, whatever, it's based on what we give. Now here, what is given here is based on the examiner. Your examiner can't go beyond this. Your examiner has to stick to this. Technically, do you understand? Yes or no? So your examiner has to test you from these areas. So I want you to make sure that you go through this entire. That is number one. Are we clear? Are we clear? Super. The second thing is examiner's reports. Now, when you go to the report, your examiner, after an exam session every 6 months, they sit and write a report. Why do they do it? This report gives a proper analysis of the exam session March and June to explain where the students went wrong, what needs to be improved. Now, for example, your examiner speaks about, in this case, there has been a question which has said, describe 8 audit risks, explain auditor's response to each risk in planning the audit of Rainco. Something similar to what we saw. What we saw was 6 audit risk and response. Here 8, giving you 16 marks in the exams. Like I told you in my earlier class, last class, this is an important area, priority, high priority area. Now your examiner says, when you take section B, the 30-mark question is based on GCO, which sells plants, garden equipment and garden furniture to wholesale and retail customers. This question tests candidates' knowledge of audit risk and response, consideration of laws and regulations, substantive procedures for additions to property, plant and equipment, and quality management deficiencies and recommendation. Okay, we'll come to that. But out of the 30 marks, more than 50% is contributed to audit risk. More than 50%. So the section B, when you take section B, you've got a 30 marks question. Now when you take this 30 marks question, a 16 marks question directly on audit risk. If you are well prepared, you knock it off. You master this. Now here your examiner says marks are awarded for the identification of audit risk, half mark each. Now when you look here, okay, I'm going to explain you connecting it to the scenario that we looked into. Now here you identify this, right? This 5 million as a risk. That identification gives you half a mark in the exam. Now this identification, where you identified from the scenario, that gives you half a marks only. Half a marks only. But where do we get the remaining? Now look here. And an appropriate and explanation of audit risk. Now identify it as a risk and why this is a risk. So I get half marks here. I get half marks here. Do you understand how your examiner is testing you? And then for the response, an appropriate auditor's response to each risk will give you 1 mark with a scenario-based requirement, such as this is the good exam technique is critical. Exam technique is critical. 1 mark here, half a mark here, half a mark here. In total, you get your 2 marks for this. Are we clear? Yes or no? Are we clear? Yes or no? Now guys, these are topic explainers. Your examiner is explaining you how to score your valuable marks in the exam. The scenario will typically contain more than the number of risks required. Now for example, in our question, there were 8, out of which only 6 were relevant for us. Correct. So it is important that candidates plan their time carefully and only attempt to list the required number of points, not go anything more than that. If your examiner wants 6, give 6, not 8, and don't expect the examiner to go through all 8 and give you marks for the ones which are correct and ignore the ones which are wrong. No, you're not going to get your marks. Are we clear? The first step is to identify the factors that will give rise to an audit risk. This information can be found directly from the scenario. All of the information in the scenario should be read carefully, including the opening paragraph, as this may include information relevant to the identification of audit risk. When undertaking this, read through it would be good exam technique to use the highlighting function, as this provides a visual aid for quickly spotting the audit risk. In the exam, you can highlight. You have the highlighting option. Now here, I have my pen with me, so I'm using my pen. In the exam, if you have highlighted it, you can easily spot your audit risk. Highlight only your 6 risk. Don't go beyond that. 6 confident risk, but read the entire scenario. Now, your examiner comes here and says, some students think, now you look here, some students, what they do, it's a common misunderstanding among students. Okay, professional skepticism is a very generic answer. I can apply it everywhere. Everywhere I'm going to apply. No. You apply professional skepticism when you think, okay, there is a little problem, a bit doubtful areas are there, estimations, policies, judgmental areas there. That's why you have to use professional skepticism. Now here your examiner says, look here. Candidates often suggested increased professional skepticism for a whole range of audit risk as a response, and whilst valid on its own, it is not a suitable auditor's response for 1 mark. It's valid, yes, but look, it's not always suitable for you to pick that. This is because increasing skepticism does not on its own help the auditor to gain suitable audit evidence or the identified audit risk. For the sale of shares by, okay, now they're connecting it to the scenario. We'll come to that later. Okay. Now, they say, additionally, a significant minority of candidates gave general statements of the required accounting treatment. For example, for inventory risk, it was common to see perform NRV testing rather than how the auditor would test whether the cost of the damaged inventory was above or below NRV. Now, here you are talking about inventory. I can connect it to the scenario properly because ours was also connected. A significant minority of the candidates gave general statements of the required accounting treatment. For example, for inventory risk, inventory NRV problem, it was common to see perform net realizable value testing rather than how the auditor would test whether the cost of the damaged inventory was above or below NRV. Now, look here. I will discuss what the finance director on with the finance director on the rationale for carrying out inventory at 1 million even when NRV is lower. I'm not stopping there. I will also review post-year and sales report of the damaged inventory to assess its inventory and will request the finance director to write off inventory. Guys, I'm not just asking them to do a cost of NRV testing. I'm going one step ahead to say, look, I will go and check my post-year end sales report to check if the inventory's value that they have sold is lower or higher. Are we clear? Do you understand? Guys, am I clear? Am I clear? Okay. And why examiners reports are important? This is one of the primary reasons. Future candidates, who are future candidates? You are advised that audit risk is and will continue to be an important element in the syllabus and must be understood. Candidates must ensure that they include adequate question practice as a part of their revision on this key topic. Your examiner is saying, hey, look, it was important. It is important. It will be important. So because of that, include this as a part of your revision, and they don't stop there. Your examiner goes one step ahead to say, good questions to practice. Good question to practice from the published sample questions includes Night Electronics, September, December 23, Lapis, March, June 23, Magpie, September, December 22. Ask all these questions your examiner is saying, hey, look, go and check. You know why? You know why your examiner says? Most of the time when your examiner names these questions, it is because next exam session, something very similar can come. Very similar. Now I'm telling you, you know what? For your December exams, you will definitely get something out of this, whatever we have proposed here. This is coming from your examiner, not me, my dear. Your examiner is giving you a list of questions. Go practice about 10 times, no problem. Why? Because your questions are going to be based on something, a scenario like this. Guys, it can't be easier than this. It can't be easier than this. Are we clear? Are we clear? Are we clear? This is your recent ACCS examiner's report. Now, like that, you have your examiner's reports, right? Before your exams, you have to go through everything. To successfully get through this paper, you have to go through everything. Particularly March, June 2024 is there, right? Wherever your examiner is saying, okay, you have to practice these questions, you have to practice it. It is coming from the examiner. Your examiner is saying, hey, look, I'm giving you about 10 questions. Please practice it because I'm going to base my future questions based on this probably. Practice it. You say, no, I don't believe you, although you give it to me. Hey, it is a golden plate given to you, yeah? You got to practice it. Very simple as that. You practice it, you see your results. Audit risk, you are simply getting through without a problem. Are we clear? Are we clear? Are we clear? Yes or no? Okay. Now, my next question is, before looking at our next particular area, area of our syllabus, Probably I'm looking at substantive testing and internal controls and reporting. Do you want to practice another audit risk question with me? Do you want to practice another audit risk question with me? Or you're fine? Do you want to practice another audit risk question with me? I want you to respond. You're confident or you want to? You want, give me an A. No, give me a B. We can move to the next areas because they are a bit complicated. Okay, I'm getting A also. Okay, I'll go with the majority. Okay, Shaifullah, don't worry. We will cover all the areas as much as possible, right? I think it's better if you can practice another question also. What do you think? Just to boost the confidence. Oh, I'll allow you some time. You can once again, this time, do it properly on your own. And I will do a quick discussion. I'll not write answers. Probably I'll do a quick discussion with you. Can we do that? Okay, that would be good. Super. Now, another area that I would, another area that I would prefer you to try would be kangaroo construction, audit risk AA question. Okay, this has some sort of ratios as well, right? This has some sort of ratios as well. Okay, this is a question. Okay, now this has ratios as well. I would request you to practice this question on your own because this got a bit of ratios and looks a bit different to what we did earlier, right? So what I would do is this for about 15 marks. I request you to go back, do this question and come back on Saturday. Saturday, as we start the session at 2 o'clock, first maximum half an hour, I'm going to take time, explain this and continue with my next area. My next area probably, like you know, will be internal controls, substantive procedures. So my plan would be to give you a brief explanation on how you've written the answer. That is on Saturday when you start at 2 o'clock. And then we go on till 6 o'clock as advised for us to work on the other areas. Are we clear? Are we clear? Okay, superb. So let's stop there. Let's stop there and let's continue on Saturday. I'll share this question with you. Okay. I wanted to do the class until 10 o'clock, but PPIM is closing now. I think there's a little listing because at after 9 they are closed. So I'm going to stop now, but we are going to continue with Wednesdays. That's okay. We start at 8 o'clock, right? From next week onwards, we'll start at about 7:30, half an hour early, and we'll go until about 9 o'clock to practice questions. But Saturday, as we have, that is going to continue. From 2 to 6 o'clock, we will continue on Saturday. Okay? Super. Thanks, guys. Take care. I'll be sharing this with you. Good night. Bye-bye.